Hey, folks, welcome back to this week's episode of Finance Fridays. I'm your host, Lucas Ballahood, with Coldwell Banker RMR and the Ballahood Group. Now, our good friend Alexandra Job with RBC couldn't be with us today, so I'm bringing in some help from the bullpen, that we call it. I'm a sports guy, so I'm going to go with the baseball analogy here. My good friend and colleague in our office, Tara Dickson, is joining us today. Tara, how are you doing?
I'm doing great. Thank you. I'm excited to be on and talking about one of my favorite topics, real estate.
That's right. So one of the things that we like to do quite often is between Alex and I is talk about the financing end of things, sort of how the financial outlook in the market is, or what the financial outlook in the market is right now. Sort of, and certainly we've been tracking a lot of what's been going on with interest rates over the last number of months, and how that's affected values and things like that. We often talk about different strategies for people to help improve their own cash flow, different tips and things like that that we talk about today, or that we generally talk about with Alex. So one of the things that we've been chatting about in the office a lot lately is, the changes in the market and what we can expect for 2023, and how we can better educate our clients on how and what is likely to happen this year. So, we've been doing a little bit of research on, what's been going on with inflation, and what the Bank of Canada are going to do. So we did just see at the end of January there last week, 25 basis point increase to the overnight lending rates of the Bank of Canada. And it sounds like they're going to hold on to those overnight rates for a little while, and see what happens over the next couple of months. How are you seeing, and I guess as we go through those announcements to getting to the end of the consumers, like, what are your clients saying to you about what's going on out there? How are they feeling?
So, one thing I always try to educate my clients on is what they necessarily see into the public eye, and what's put on the news is usually not the case. Um, there's a lot of influence in those opinions. There's a lot of uh, I'm going to say uneducated people just giving advice. I always say the best one that you could get the most accurate advice would be the real estate agent that you're working with, because they're in the bullpen the whole time dealing with deals, listings, offers. They're seeing the commotion and the action firsthand more than anyone. So in regards to educating my buyer clients, I really try to educate them of, what was the average sale price last year around this time? What was the interest rates around this time last year? And comparing it to the average sale price today and the interest rates today, and really breaking it down for them and letting them know that in most cases, they're actually paying less monthly than they were back this time last year, and educating them that, you were paying 200,000 more this time last year. And that's the actual value of the house that you're buying. That's the amount you have to pay off. So today you're paying 200,000 less for the exact same house, and you're not in multiples all the time. But at the same point, we also have to educate our clients that, a lot of sellers are under the impression that it's not a good time to sell, nothing's selling, things are sitting, and that's actually not the case either. If it's the right house, if it's listed appropriately, it's got the bigger piece of the pie of the buyers. So first-time home buyers, 3-bed, 3-bath, great communities, in specific areas of Durham. We are seeing multiple offers. We are seeing a lot of showings. We are seeing a lot of interest. And that's not a spectrum of a certain budget for a type of house. We're seeing that from the lower end budgets all the way to the luxury level budgets. So if anything, it's just educating our clients that every single situation that they're in is different. If they're looking at this house today, that might be a different situation than the house they look at tomorrow. And it's, at the end of the day, fully educating our clients on the situation that they're in and making sure that they're informed with the proper information of the market.
Yeah, each situation and each property is unique in its own, negotiation as you're trying to acquire the property, right? And you're talking about the media, things were really quiet in December. There was, record low in terms of the number of sales compared to the previous few years. It was like 380 or something like that in December. But people have really been out shopping again. We were just chatting about it in our meeting a couple days ago. We had 16 offers in a property in North Oshawa that was a new build of sorts, or a couple-year-old home, selling in multiple offers, 1.6 price point,
Yeah.
1.6 million that is.
Yeah.
But we're also seeing the 500, the 599 homes, are also seeing multiple offers. So, the properties that, because we do have more inventory available, buyers are going and shopping. But the ones that are really moving quickly are those premiumly or superior priced homes and superior presented, right? So
Presented presented is, in my opinion, one of the most important things, because I feel like through the shift that we're having, or that we've had, a lot of people just end up listing their houses. They don't put the effort in to list it appropriately and properly staged, doing the little bit of work that it needs to be done. And they're just getting over anxious to list. And those are the ones that are going to sit. So if they're priced, if they're trying to compare to the listings that are completely up to date. So, at the end of the day, I can't stress to my sellers enough that, I know you think you're not going to get it out, but let's calculate a budget. Let's put a plan in place, and what are you going to get out of the renovations that you're going to do? And what's the timeline to do those? And it's honestly a plan from A to Z when you're working with sellers.
Well, you need to have a plan. You need to be focused on what's the overall goal that they're trying to achieve. There was
Mhm.
such a demand for people with a finished basement, some special amenities in the backyard. Because again, we need an office in the basement because I'm working from home, right? Whatever it kind of was, the demands certainly created by the conditions we were under at that point in time, added to the demand for certain property under that, the conditions of the market, talking about last year.
Mhm.
Whereas, fast forward to today, prices have come down. There's more inventory. It's more of a balanced market. But you're right. People do have to make sure that they have a plan in place that's going to help them, stand out amongst the crowd, because there's so many. It's a garden right now that's growing. There's going to be a lot more inventory in the market, especially as we head towards the springtime. If
Right.
someone is thinking of selling right now, they need to start preparing today, because that's going to be here before we know it. Now, one thing I want to jump into here before we get too carried away talking about we're getting ready for the spring here, because gosh, the weather has been absolutely crap the last couple of days. It's been freezing. I've been hunkered down at home. I'm sure obviously I see you're in the office today, but I imagine that's a place you'd want to be at home, just sort of curled up right now. So talking about like what's happened in the last year and how that has affected people today. Interest rates have priced a number of people out of buying right now. It's
Yeah.
affected their borrowing power to a big degree, and that has meant that people have to start looking at, they still need a place to live, but if they can't buy a house, well, that means they need to rent, right? And investors, as we were just touching on a little bit, is just some folks who have purchased a property and at a very high number, and now they have to refinance it. When rates go up, landlords still have to pay their mortgages down, and when their rates go up and their mortgage payments go up, so does when the units turn over, so does the rents that they're going to charge.
Mhm.
Right. So when I was just doing some analysis here from just in Durham region from this past January to the one last year, we saw a 47% increase in leased properties uh, in that 12-month period of freehold style. So that might have been sort of the house hackers that are they're living in the top unit, they're renting out 2 bedrooms in the basement. Those kind of units in January were almost $1,900 a month on average. A 3-bedroom, let's say, was $2,600. A 1-bedroom actually saw the biggest change year over year. It increased $300 from January of last year to this year for a 1-bedroom. So prices have gone up all over the place. Condos as well. There's a huge increase in the condo activity. I was just from my tracking here looking at a 316% increase in the number of properties that were leased, condo style properties, whether it's a 1-2 bedroom apartment. That's a huge jump. So obviously, that market's been very competitive as a result of people being priced out of the market as a result of their qualifying or pre-approvals. So that's a big change for me too. I don't know how if you've spent much time with clients condo hunting lately. I found myself in the rain at a building that had a couple hundred units in it, and I was standing in front of a wall of lock boxes.
Yes.
I'll tell you, I got
Yes.
rather wet that day looking at those units, trying to find the key that I was looking for.
Yes. That's the
Not
difficult
to,
part of condos.
yeah, not to say it's not a market that's very active right now. It definitely is. But that was my little experience that just sort of had a flashback there as we were talking about condos, or as I was going on about condos. How are you finding your investor clients really looking at things right now? Are they excited about what's going on, even though interest rates have gone up for them?
Most of my investors are, I have a lot of seasoned investors and I have some new investors as well, but happily, my new investors like to listen to me quite well. So they're in comfortable places, I would say, right now, and they're just sitting steady. And honestly, it's about your tenant profiles or your client profiles as well, right? Like, not every investor wants hands-on or busy, busy, busy. Some just want very passive investments, right? So at the end of the day, there's a lot of categories, I would say, for the type of investors that you can possibly deal with. In regards to what I see the action that they're doing, a lot of my investor clients definitely saw this coming. They put their money into their own assets that they already had. They built up the equity value and they refinanced a lot of their money out and locked into very low interest rates. And then they're sitting on all this cash and they're just waiting for those gems, because we all know as investors, they're gems that you find. And a lot of my investors are looking at duplexes and triplexes. And a lot of my investors are looking at multi-units too, because a lot of multi-units are selling right now. So um, they're excited. At the end of the day, investors are the most logical thinkers when it comes to numbers. So, they're calculating numbers, they're calculating cash flow, they're calculating return on investment. And if the numbers make sense, they'll dive in. There's no emotional attachment to the investments for them. With that regard, interest rates change. The price that you paid for the house originally or the building originally doesn't change. And they know that. So if the numbers make sense, they're excited. And there's tons of investment opportunities out there right now. There's a
Well,
lot.
they always say too, like there's a couple old adages that I've always heard growing up in a real estate family. One is cash is king, and
Yes.
the other is you make your money on the buy,
Yes.
right? So for times like this, if someone is liquid and able to leverage some cash to help buy a property to minimize how much they need to take on a mortgage perspective, because no one has, and I don't know many people that have a couple $1 million sitting around to go pay for a sixplex or something, right?
Mhm.
But we are seeing those multi-unit buildings up for sale again, and yeah, I think even just talking with our friends at RBC at our business meeting this week, they're still financing at those big banks are still financing sixplexes or buildings up to six residential units in it without needing to get secondary commercial
Marshall.
funding from
Yeah.
a secondary lender. So
Yeah.
that's a good thing. The bank, if the bank's got confidence in that market as well.
And a perspective too is with everything that's happening in the market, with the shifts, the amount of rental units that have increased, the amount of people who sold their assets or are selling their assets because they no longer can afford them. That could be their primary residence too, because a huge trend, I would say, going through 2021 was the the desire to take out quote unquote home lines, and then
Mhm.
people not understanding the interest rates that are associated with those and the payments that are associated with those. And some people are having to sell their primary residence. So, from a investor standpoint, what's your client profile, your tenant profile look like now? It's definitely improved because a lot of these people were homeowners. They're sitting on a ton of cash. They're waiting to buy. They've taken care of houses in their time. It's not the tenant profile that existed before COVID. You know, you have a lot more array of type of tenant, but we're also at the market where there's so many units available for rent in Durham, especially, that you have to have a nice unit. You have to have a really nice unit to rent out to get that top rent, in my opinion, dealing with my clients. So
I think the rental market and the purchasing market, we'll call it, are they tend to mirror each other to a degree.
yes.
As we saw the last couple of months, the freehold, the home ownership market has been pulling back, but the rental market has definitely picked up. If there's agents out there that work with clients, I certainly do have ones that are renting as as an interim solution here, while they're waiting for prices to come down to a spot where they're qualified again. A number of first time buyers, right?
Yes.
That kind of stuff happens, and they're sort of wait and see. Prices come back down to a zone that I can work with. Because again, we are in a changing market. Sellers still do have some expectations of numbers from 6 months ago, right? So that's that talking about educating our clients on what's going on. Just as a mini side note here, if my neighbor sold 3 months ago, but there's a comparable property that's sold up the road for 20% less, that 3 month ago sale is way irrelevant now. You've got
See,
to
now
stay
it's
much more
crazy.
current as things change. You can't use an older property as a comp because there's too many recent properties that have sold at a different number,
Yes.
that agents and consumers can see. Everyone's got Zillow and all these other apps these days where you can see what things have sold for. So everybody has all the same information on the whole. So there's no fooling people these days when it comes to what market value is for a property, and people's budgets have
Well,
been stretched, but we'll get through this tough time as things get back under control.
a good point on that one too is, we're kind of in the market too, where when you're evaluating a property to list, it's very important to pay attention to the details of the comparables. So, for example, like a lot of my listings, what I like to do is I go to showings, I go view the houses that I think are comparables or that will be comparables, and I see the finishes and I see the quality of the work and I see the craftsmanship and I see the renovations that have been done. And what I'm seeing with listings is your house might sell for 25,000 more than the one that just sold next door, and they're the exact same layout. But because that house sold for 25,000 more because it had 25,000 more in upgrades, it was worth it. So we're at the time where things are selling for what they're worth. It's nice to know. That's what a comparative market analysis is a understanding that, their kitchen's not up to date, but your kitchen's completely up to date, or the other way around, having a client that has not updated a thing. They need to understand that your buyers coming through here attach value to finishes, they attach value to renovations, new windows. So it's educating your client, like you said, on the expectations of, we're in the market where it's, if I'm going into a listing consultation, I have to be very direct about expectations, because I'm not gonna hope that you get a higher number because that's what you want. We
Yeah,
have to be
we
real.
can we can hope for that, but we better have a
We
plan B when that potential doesn't come through,
was
right?
beautiful.
No, no, we can hope, but we better have a plan B. I think
Yes.
I think that is important. You have to have certainly define the expectations. If X outcome doesn't to fruition because the market informs us that maybe we missed the mark a little bit in terms of what we thought the value might have been, because you can't fault the homeowner for believing that their home is worth more than maybe what the comparables might suggest
Because
or tell
we all,
us.
right? We all love our homes. So
Yeah, right. But to one, I've got a pool table in my basement and all this awesome, I'm a huge Leafs fan, so it's completely decked out in Leafs gear, right? Kind of thing, or whatever. Shout out to the fact they got spanked by the Bruins last night. But the fact, someone's not, they're going to walk in and be like, oh, that's awful. I don't want to pay the
yes,
extra X amount of dollars for that, right? Because they're a Habs fan or they love football or they're not
exactly.
into that at all. The simplest one is a finished basement versus an unfinished basement.
Yes.
What's the what that's the easiest one. What's the replacement cost per square foot to do to up or to refinish this property that doesn't have anything down there, right?
Yeah.
And that's just a simple adjustment that people need to understand. Well, I got a 2-story house with 3 bedrooms, and this guy got a 2-story with 3 bedrooms, but he's got a finished basement in there, so we have to play off of that stuff.
Yes.
Um, certainly there's a lot of changes in the market, and I know we could talk about numbers until we're blue in the face, but one thing that stuck out there was that is different when you're talking about a residential homeowner versus an investor is an investor only cares about the numbers, not what it looks like or what the property's got on.
Yes.
Where in a residential buyer, that is something that they care about.
It's an emotional buy.
Yeah, and actually, it's funny because the hesitancy that's going on in the market or that we're seeing in the media is not necessarily reflective of what's actually going on out there. Homes are more affordable today than where they were based on the prices from this time last year. So people should, at least sleep peacefully at night knowing that even though if I bought a property then I've got a higher mortgage payment, or that I've got a what feels like or looks like a higher mortgage payment, it's actually not so bad when you look at what buying a property was like last year.
Mhm.
And a wise man said to me once recently, one much wiser than me, is that you marry the house, but you date the rate.
Yes,
And
that's
that's a
very
temporary
good.
this is a temporary thing we're going to see.
Yes.
So if someone finds a house that they really love, and they can manage the payment and the rate in the near term, they should jump on it, because you're going to date the rate but you're marrying the property.
Yeah.
So as far as I steal that one today, I will give my colleagues some credit a little later. Anyway, I think that's all we got. I think we have time to cover today. We've jumped on a bunch from what we've seen sort of trending in the market, and what's sort of going on in the activity side of things and the buyer level, and how the investing world has changed over the last 12 months has been interesting as well. So thank you very much for being with me here today, Tara. What we're going to do as well, as we always do, is going to get our contact information rolling through like the credits at the end of this video here. So folks, thanks again for joining us. You will find us on YouTube and all the lovely social channels. You have us here on Finance Fridays, and we look forward to Alex joining us again whenever she does decide to come back from the sunny weather, if she's sitting on the beach and get back to work. But Tara, we'll have you on again here soon as well, and always love catching up.
Yeah, thank you so much. And it was definitely awesome having a chat with you.
All right, great. Well, have a great one out there, folks. Stay warm, stay safe on the roads, and we'll be with you again soon. Bye for now.
See ya.